We are recording this Zoom meeting for training, quality, and content purposes. Everyone be aware, we're also live streaming on Facebook. I'll drop a direct link into the chat. Thank you all for joining us. Happy Friday. It is Friday, so it's a Real Estate Friday with Daylon Rabito, and we have a very special guest today. Go ahead, Daylon, and introduce our guest.
Hello, everybody. Happy Friday once again. And also, as you know, every Friday, we're trying to make it simple. That's where we make real estate simple for you, enjoyable, so you can learn a lot, get a lot of content and learn as much as you can. And for that, today, we're going to be talking about loans, especially we're going to be talking about non-qualifying mortgage. And for that, we have invited our guest speaker. His name is Luis Pacheco. Luis Pacheco is the original vice president with Encore Mortgage. And today, he's going to be for a few minutes talking to you about non-qualified mortgage, which is also known as non-QM loans. And as you know, non-QM loans are flexible funding options for borrowers with unique income qualifying circumstances. So Luis is an expert at this. So Luis, take it away. You have our undivided attention.
Thank you so very much, Taylor, for that intro. Hi, everybody. Once again, Luis Pacheco with Encore Mortgage. Just a little bit of a background. I've been a real estate broker in California for over 25 years. Had the privilege of servicing REOs back in the day, got a lot of clientele, financial institutions, got to really get real deep into the financing and how these banks work. And recently I am opened a branch here in Florida, moved about 6 months ago. I'm new to the area, but not new to the business. We have been focusing on this non-QM niche here in Florida. You know, in California, we have different type of markets, business owners that need to go stated income, bank statements, different 1099s, different ways of one being able to qualify, different than a traditional where you need to have your bank statements and your income reserve and all that stuff. So I just wanted to share with you guys options, flexible funding options that allows an ability to target a different type of market, market that's going to probably take over in the next year or two. Right now, 80% of our loans are your typical traditional and 20% are non-QM. But as the market goes, as the rates go up and as credit becomes tougher to get, non-QM is going to be a big player. So it's kind of good to have a heads up and get involved with it, understand how it works, know that it's an option, because you can be talking to some people that feel that they don't qualify for a loan, but in reality, the products that we're bringing here to Florida have all kinds of options that actually opens an array of opportunities for very, very different type of, sorry about that, I was getting a phone call on my computer, but just opens up every option that's available for any type of buyer. I have a little PowerPoint presentation I'm going to put together. I'm going to share my screen now, and if anybody, Taylor, you can let me know if for some reason you guys aren't getting it.
Yeah.
1 second. Okay. Are you guys seeing that?
I can see it.
Okay, beautiful. Okay, let me just move this out of the way. So anyways, the idea behind non-QM is to give you guys a explanation on what exactly is non-QM. And I'll leave this questions for the end, and I'll just kind of go through this. But non-QM is what it's thinking outside the box, being flexible with the type of different loans that are available out there. So for example, these are the different ways that you can qualify with a non-QM: bank statements, debt servicing coverage ratio, 1099 income, written verification of employment, profit and loss, and asset utilization. So let's just say, for example, you make $100,000, $200,000 a year, okay, on a 1099. I can use 90% of that to qualify you for a loan. it's okay if from the 200,000, if you write off 170,000 and you only want to claim 30,000 as income just to avoid paying taxes, as many business owners, do. I've got a product that allows the ability where I can use their 1099 and I can give them 90% of that income to qualify them. Now, that's another option. I've got an opportunity where, for example, you have people that have a ton of equity, debt servicing coverage that allows an opportunity that they have a ton of equity, but they don't have an income. They don't have a job. They're retired. They're sitting on $1 million worth of equity, and you want to go ahead and get them to start buying property or income, having them leave a legacy of properties for their families. That's another product. And I'll get into, for anyone that wants more info and detailed information on each different product, feel free to reach out to me. But I'll just want to kind of give you a little bit of a rundown of some of the things that you're able to use. So business owners, people that are self-employed, those are your perfect candidates. There's a lot of people that are getting paid 1099 these days. Your traditional loan, you need tax returns, you need W-2s, you need pay stubs. Us bringing this non-QM product, we're very aggressive. We are outside the box lenders. We're not going to tell you, oh, no, we can't do that deal. We're going to find a way how to put it together, because it's like a mechanic having a bunch of tools. If I've got a screwdriver and a flathead, but then I have all these metric and all these other tools, I'm going to be much more able to help you and be result driven with having more tools and more products to offer you guys. Another opportunity, for example, 4 legs of the table that you will look at: income, credit, reserves, and property. That's your typical loan. People need income, they need credit, they need reserves, and they need property. And there's a lot of business owners and there's a lot of clientele out there that don't fall with this information, but have the money. They make it. And when we start talking to them, a traditional lender that's only used to doing FHA and conventional and having the buyer come and bring, 750 FICO score, that's an easy deal. Everybody, who doesn't want to work with those deals? Those are beautiful deals. But this product that I have with non-QM, your minimum FICO score is 600. So that just opened it up in so many different options. So being a real estate broker and having to, and I was a listing agent and I worked with buyers, but having to reinvent myself during different markets in the California market, what made me successful in my business was always being open to doing different things, searching different markets before everybody else is doing it. It's kind of like getting a stock tip. When someone's talking about stock tips around the office, around coffee, guys, it's too late. You missed it. You know what I mean? It's always good to get into it at the beginning. Non-QM has been around, but the cash buyers that you guys have all been spoiled with, they're all there right now. But what happens when they're gone? What happens when because this too shall pass. I've been in the business 25 years and I've seen a lot of things that you would say, shake your head, that'll never happen. And it does. And it's not bad to have information that's set up for where the industry is kind of setting itself up. But what is a non-QM? It's the opposite of these traditional loans. You're going to get low rates, full doc, good credit, conventional jumbo loans. That's a qualified mortgage. You also have the hard money options. These are all the different options that you can get. Hard money, where you'll end up paying 4-5 points of fees. You'll get somebody into the deal, but the plan is to refinance them out later. There are times when that you have a scenario where you've got a deal, you're fighting against a lot of cash buyers, your client really wants it, and there's no time to get financing. Well, we can also do a hard money loan. We also have the ability to do that, where we can get you into the deal. Those deals aren't cheap. Those are emotionally driven. Here's the money, we can make it them, and then we can make it happen, and then we can refinance them out of it. So that's another option, but it becomes expensive. This is where non-QM becomes a better plan. These are the different program types that we have. a bank statement program. I can do a loan with 2 months bank statements. I could do a loan with 12-month bank statements. I could do a loan with 24 months bank statements. The more bank statements I get, the better pricing. My loans start at 3.375 for non-QM guys. That's not hard money. A lot's going to dictate on what type of program we're going to go with. A lot's going to dictate the credit. A lot it's going to dictate if I got someone that has a 600 FICO score and I got somebody that's got a 770 FICO score. Well, we all know how that works. You know, everything is set up in tiers. Like I mentioned previously, I got a 1099 program. I can use up to 90% of that income. Regardless, I don't need to see the taxes. I don't need to see the taxes regardless. If they want to write it all off and claim that year as a loss, I can do that deal with their 1099 and give them up to 90%. I got a verification of employment. All I got to do is call the employer and get a letter of employment and what they make, and that's it. I can do a loan. I mean, I'm going back right now, guys, to like 2001. If any of you guys were in real estate back in the day, you know, a lot of these programs started to come out and stimulate the stated income product, you know, before obviously 2007, 2008, where it became abusive and it got out of control. Prior to that, it was a program that stimulated the market. Debt servicing, which is it's a really neat program for people that are retired that, for example, have owned tons of property and it's free and clear, or they have rental property and they're having income coming in, but they're retired, and a traditional bank's not going to go ahead and give them a traditional loan. This works really well. This is a really neat market. I was talking with Dalen the other week, and I told him, I go, this niche is really big in Florida for nationals. Guys, every time it's interesting, every country has a, they go through their period, they take their turns. First is Venezuela, then it's Colombia, then it's Peru, then it's Ecuador. The moment their government has a freaking uproar, the first thing the foreign nationals want to do is they want to take their money outside of their country. I could do a deal stated income for 25% down to a foreign national. They need to have a little bit of credit or something, a phone, some sort of credit here within. There's a lot of foreign nationals that come here, they spend a month, 2 months, and then they go back and they love it. They want to buy here. I'm enjoying being in Miami because the diversity, you know, coming from California, you see a Latino being bordered next to Mexico, and 95% of the Latino is Mexican. Here, it's a melting pot, guys. Peru, Venezuela, Honduras, Argentina, I mean, Cuba, Ecuador, you have people from all over. And that foreign national product, 25% down, is a good product. It's once again, if any of you guys are working with those type of clients that want further information, reach out to me. We also do the FHA, the conventional, the VA, all those easy deals. We're the most competitive in pricing. I'd like to focus on helping you guys on the outside the box loans, the outside the box deals that need a little bit of help and push to make happen. We're very aggressive, but you know, we have to be reasonable with how we put deals together. It has to make sense. And you know, I don't want to come across like I'll put anything together, but we will. But we'll use it with the different programs that we have. We have a bunch of different programs that if it doesn't fit in this one, we can fit it in this other one. We got HELOC programs. The HELOC programs, we won't take a second position. We'll be in first position. We'll pay off whatever you guys have and be a HELOC in first position. Asset depletion, jumbled programs, 1-year tax returns. Like I said, all I need is a 1 year. Most traditional loans, you need 2 years tax returns. Here, you only have 1 year necessary. I-10 number program. I need a 680 FICO score, and I can do an IT for, which is a temporary identification number, kind of like before they get a social security. And I can do that particular loan with a 680 FICO score, 20% down. So that's just an idea of the different programs that allow us to think outside the box. There is a lot of different programs that are out there, which is what we're all used to. FHA, conventional, VA, and cash. Cash is very popular these days. But you know what, guys? Being in the industry 25 years, I see cash deplete real quick. And these are the type of loan programs that exist. There'll always be the wealthy that will always buy. There will always be the hedge funds that will always step in and buy. But then there's that middle class that really wants to buy, that doesn't have quite the necessary taxes and hasn't been advised with their CPA. We have programs for those people. That's a big market here in Florida. This is kind of where I've kind of touched bases on this information, where it's self-employed, cash paid buyers, taxes that don't reflect their reality. You don't know, in California, guys, there's people that make $1 million and then they claim they only make 80,000, but their taxes are there. They get too creative with avoiding taxes that it bites them in the butt. We have programs for that. Taxes that are not used at all. For example, there's people that don't do taxes, or they claim 20,000 or 15,000 if that. Who's going to get a loan with those type of taxes? There's not a lot of people. Non-wardable condos. There's a ton of those here, guys. For any of the foreign national products, on that particular product, just on foreign national, any condos that are non-wardable are 35% down, not 25%. 25% qualifies for single family residence. Like I mentioned, our rates start at 3.375, all based on the property, all based on the credit, all based on what type of program we're going to put together. So we're not a hard money lender, guys. We are a very aggressive California-based lender. We're going to make an impact here in Florida. I think it's the non-QM is a market that not a lot of lenders really want to dive into head first. They want to dive in and give me your conventional, give me your FHA, give me your easy deals. I don't want your easy deals. I want your hard deals. I want the deals that are sitting in the back that need help, and let's massage those. Let's help you close an extra 5-10 deals a year with deals that you thought couldn't close because other lenders weren't wanting to work them. A lot of these loans will qualify for principal residence and investments. We do the purchases and the refis as well. But I guess where I'm getting at is the markets are going to change. Right now, 80% of our market is, your primary traditional mortgage guys, and 20% is non-QM. All the data shows that we're going to be shifting over to a bigger part of non-QM. Why not get into it? Why not know it? Why not, in real estate, think of it like, your production, your product is, you're like a fisherman. You're sending your boat out with nets to try to catch as many fish as you can. Go a little further than most people and catch bigger fish. Be prepped for it. You've got the technology. You've got the support from your office. I'm available to assist you guys in any which way. The most important part of it all is just everybody working as a team to think outside the box to be able to put that deal in escrow. Most buyers sometimes are disillusioned because, oh, you need 40% down. I need to see taxes. I need to see these things. And they start shaking their head and they say no to all these requests that some lenders have, and it turns them off. Why don't we approach them and say, look, this is all I need from you. And we go asking them for stuff they already have, that we know they already have. You got a 1099, you have 2 months bank statements, you have 12 months bank statements, and we can combine personal and business bank statements. So, flexibility is there, guys. Flexibility is there. There's no reason that deals need to be walking out the door or disillusioned. But I'll leave this here. If you guys want to have any questions for me, if there are any things that you guys would like, if you guys would like to jot my email, is that right here, and you guys are able to reach out to me If you have any questions or any scenarios that you guys might need assistance with, feel free to reach out. I mean, the idea is I'm looking to be your business partner and help you guys close more deals. Allow me an opportunity to bring value. And 25 years of experience, guys, that's a lot of years of experience. And I feel that being a real estate broker, I speak the same language that you guys speak, and I understand what you guys are doing. So even when dealing with some of your clients, I know how to talk to clients that can only help. There's a lot of agents that are afraid to have their loan officers talk to their clients. But Dalen, I don't know if you have any questions for me.
I do have some questions for you, my brother. So I noticed that you were talking about the market, and that you're saying that there could be a market shift, right? And we're starting to see that. Like, if you notice the trend when the whole thing started with pandemic, what happened to the non-QMs? They disappeared, right? But now you're starting to see a little bit of those non-QMs to start showing face in the market. And I appreciated that you put that slide, because you show that 20% of the non-QM are now present in the market. And as we go now into 2022, we might be able to see some of that shift bigger. So what do you see? Because you've been in the industry for 25 years, you have a real estate background, right? You're a broker as well in California. So coming from a real estate background and also the mortgage background, what do you see the market shifting in reality, like now coming 2022?
Well, that's the crystal ball that I wish we all had. But the speculation, if I were to give a professional opinion, is that the rates, the rates are going to go up. These are conforming rates, as you all know, have gone up. Conventional and FHA conforming loan limits have gone up. The rates are going to go up as well. They have to. I mean, their inflation has reached a level that it's not sustainable anymore. That I was meeting a lot of people here in Miami that, oh no, we're not going to go through this anymore because the market. I'm like, 10 years ago, man, I could have bought a whole building with the pricing of stuff that was here in Miami when the market made its adjustment. It happens everywhere. I think the reality is the rates are going to go up. I don't think it's going to be a disaster like it was in 2007 or 2008, but I think it's going to be an adjustment. I think it's going to be somewhere between a 15 to 20% adjustment. The rates are going to go higher. The moment inventory begins to sit longer, buyers are going to come out again. There's a lot of buyers that are scared. There's a lot of buyers that don't want to get into this bidding war. I think once the rates go up and the sellers begin to, their feet begin to touch the ground again, I think the non-QM product is going to be something with a big market that's out there that's all they're going to have to qualify. And I believe that that's what's going to be a big portion of 2022. It's going to stimulate the market. And my opinion is, for those of you guys who've been in business for 5 years, 10 years, and have just been enjoying it, it's all, it's all fun and dandy while it's all happening and you get a listing and it's sold. But what do you do when there's no listings, there's no inventory? You can't sit by the phone, wait for the phone to ring. That's suicidal.
Absolutely.
In our industry.
And I'm glad you just mentioned that. So what would you say to, like, let's say a brand new agent that's in the market right now, and they just came in, they're trying to figure it out, like what's the best approach? And obviously one of the best approach that I always encourage every agent to do, especially if you're brand new, is your marketing, right? If you hit the market strong, you got to let everybody know what you're doing and what and the people that you're surrounding yourself with. That's why we enjoy this Real Estate Fridays, because we always have people like yourself, professionals that bring a lot of value to the business. So you're part of our network. So then what would you say a brand new agent, as far as the marketing goes? How can we let other people know about this type of loans and the advantage that they have of buying now, regardless if you have perfect credit or it's like 600 credit, and the non-QMs and the qualifying mortgage? So what would you say to somebody like that?
Well, somebody that's new, I come from a very old school of marketing. I come from the marketing, from the door knocking, from the cold calling. I did very, very well. Technology has stepped us into another level. I would tell somebody who's starting out to pick a certain area. Don't be one of these realtors that's selling in Jupiter and then going to Kendall and then going to focus on an area. Make yourself known in a particular area. We call that farming. Farm a certain area with your marketing. Don't be afraid to reach out to someone like myself that can be a partner that's able to help you with the financing, that's able to explain to certain clients you're going to talk to and give you some of the lingo and questions that you're able to ask. If you're new, you need to be talking to everybody. Everybody needs to be hearing what you're doing. Technology is there. The mortgage industry is becoming, it's evolving to becoming flexible because it sees a change is imminent. But yeah, I would encourage anyone that's starting out to pick 100 homes in a certain place and market. Marketing is so key. Marketing with options, with, everybody does the same things, but Zillow and Redfin, they're never going to replace the physical touch of a person, the attention of a person. That's what I would advise. I don't know if I answered your question correctly in that sense, but
you definitely did. And you added the other portion I wanted to bring out, which is what if they want to partner with somebody that's an expert on that field? Because obviously we're not expert on the mortgage side. That's when you come along. And then partnering up with somebody like you, it brings a lot of value to the table, because now I know how to market to my neighborhood, right? And be the expert in my area, my niche, or my neighborhood, where I can now say, hey, listen, we have all these programs available, where sometimes we try to overthink things. And that creates what we call analysis paralysis, right? We want to know everything. What's a NonQM? What's a qualifying loan? And then we go into those details, but in reality, we're not going to process a loan. That's where you come along.
Sure. So, if I could add, Dalen, to anyone who's starting out, who's been in the business 2 years, 3 years, and has all their friends that are killing it and seeing it, and you're not quite there, I would advise somebody to get, and as cheesy as this may sound, I thought it was cheesy too, but it works, is get yourself a nice polo shirt, embroider the name of your company, embroider realtor, broker, real estate. People love realtors. People love to talk to real estate people. They love to ask, how's the market? I mean, if you're wearing something that just makes people reach out to you and ask questions, what an inexpensive way to be prospecting, and it has worked personally. I speak from experience. It has worked. It took me a moment of, it's a little corny, but let me tell you, it works. It is a simple, easy way for some of these newbies that are overcomplicating their marketing attempts.
Yeah, love that very much. And I like the old school marketing approach as well. I think it always works, and you can always add the new stuff to it, but that's the basic, right? I would say that's the ground level, and that's something that it doesn't matter where you at in the market. If you start marketing yourself, if you start adding some of the old school ways of marketing with the new ones, it's going to be great. But most importantly, surround yourself with people that are knowledgeable, people that have experience, so you can leverage that. Right. So
Absolutely.
Lewis has 25 years experience in the mortgage business and the real estate background. So if you want to leverage that, you're already leveraging 25 years of experience that he's going to see things that you probably don't see now. Like, for example, where's the market going? It sounds like a simple question, but it's not. It's a lot of things that you need to know what happened before to know what's going to happen next. So you have to know all that stuff. And that's the new agent is hard to tell sometimes. Because probably you didn't go through a lot of those experiences. So I highly encourage you to call Lewis, reach out to him. I put his phone number and his email in the chat, but we're going to share as well with you through an email. So that way you have it, and feel free to reach out to him. Any questions you may have. And Lewis, just before we go, I have one final question just to kind of like summarize the whole thing. Can you briefly tell us the difference between a qualified loan and a non-qualifying loan for somebody like me that I don't get the mortgage that simple. And
Okay.
how will you clarify that for me?
Okay, so you're a qualified mortgage in order when 2008 happened and the disaster, because every lender was lending to anybody that had to just take a deep breath, got a loan. They created what's called safe harbor. There's a qualified mortgage. They have to have the ability to repay the loan. They have to be able to demonstrate if they want the government to bail them out this time. A qualified mortgage has to fall under, you have your income, your credit, your capacity, and all the reserves and everything was validated. Everything has been certified that it's been seen, reviewed, and seen. That is your typical qualified mortgage. Your non-qualified mortgage is the outside the box thinking. So any business owner, any cash, any waiter, some of these waiters make $10 an hour, but they're taking home, $1,000 a night. You have a lot of these type of clients that don't qualify traditional type of loan because their income shows little. So non-QM is the complete opposite of, you don't have to show me everything. You have to show me your credit, but all I need is your bank statement. You don't need to show me your pay stubs. You don't need to show me taxes. You don't need to go and look and search all the TDS. So non-QM is, in a nutshell, a stated income version where we're going to state what you make, but we're going to add some information into we're going to make it make sense through non-QM. Non-QM is going to be more of one of those products that are outside the box thinking, and you just think that buyer can't qualify for it, and we're going to find a way to make them qualify.
That's actually a really good explanation. And while you were doing your presentation today, and I hope you guys did as well, I started writing putting a list of everybody that I know that that I know for a fact they don't qualify for a traditional loan that can potentially benefit for something like this. And while you were going through your presentation, started writing things down of people that I already had a conversation with that perhaps can benefit right away. And I came up with about 49 people. 49 people,
let's do it.
families that I know for sure that I've tried before to go to the traditional way, but they couldn't. And now I know that with programs like this, they can go ahead and qualify because they're self-employed, or their taxes, they put their taxes low, so they don't have to pay taxes, right? And they think that's going to be beneficial. But when they want to buy a house and they realize, man, I should have done my taxes the right way the last year or two. So those people are great because they have the money, they have some of the savings. Maybe their credit is not the best, but there's a loan for them. So I came out with 49 people. I'll probably by the end of the day, I'll have more that I can market to. So if you do the same thing, if you start writing down everybody that you know from your SOI, from your sphere of influence, family members, friends, people that you know, write it down that you think they may qualify for this. Even if they own a property, they might know somebody. So just reach out to them and talk to them. Just make that phone call, right, Luis? Just make that phone call and
do it.
Tell them, listen, if you know anybody that's looking to buy a house, whether they qualify or they don't, I have good news. Everybody can qualify to buy a home. Right?
Everybody can
Just hand it out
qualify
to
if we
Luis.
can make it
He'll
fit.
take care of the rest.
Let's do
All right,
it.
man.
Let's do it.
Luis, thank you so much for again and joining us today for Real Estate Friday. I hope this was simple enough for all of you that are present. And if you're watching this on Facebook or you watch the recording later on YouTube, if you have any questions, feel free to reach out to Luis. Again, his phone number. Can you say your phone number aloud, Luis?
Phone number is 305-842-0080. Anybody who would like, send me a text or call me. I'm happy to help with any scenario that you guys have. And we'll make it easy. We'll make it fun. The best part about real estate and mortgage is that we have a really cool job. We can make it fun. We can enjoy and make some money along the way.
That's right, man. I like that. We're supposed to be having fun in this business. If we're stressed out, definitely it's not helpful at all. So thank you so much again for being here today. And before we go, just wanted
Thank you
to,
as well.
yeah, man. Before we go, I wanted to, Eliu, how are you? I see you in the chat, man. What's going on? Thank you so much for joining us today.
I'm doing well. How are you?
Good, man. Good. So I just wanted to point out something real quick. So I know sometimes we always think about the next deal, how to get that deal done, or how the next client, where we're gonna get this client, but we put ourselves last. And when I said we put ourselves last, I'm talking about our health and or health insurance for that matter. And Elius Viña, he's actually an expert when it comes to health insurance. So I just wanted to, bring him out real quick. Leo, if you want to introduce yourself, just let them know where they can reach you at. If you guys don't have health insurance, but you're looking for a way to implement that in your life and provide that for your family, you owe it to yourself, you owe it to your family, you can reach out to Eliu. Eliu, what's up, man?
All is good, Dalen. Thank you very much for that introduction. Yes, as Dalen mentioned, I specialize in all things health insurance, all types of health insurance, whether it's Medicare, Medicaid, group plans, Obamacare plans, individual Obamacare plans, or individual non-Obamacare plans. And I specialize in helping people that are self-employed, as most realtors are. One of the challenges that people that are self-employed have when you don't have insurance offered to you by your employer is you think that you're limited to either an Obamacare plan or a limited benefit plan. And the truth is there are other plans available out there that offer the single most important component of health insurance, which is unlimited coverage, and that costs less. And obviously I look at all the options and help you come up with the best choice. And listening to Lewis's presentation today, this is something that I run into a lot of time on the health insurance side, believe it or not, where you'll have individuals or families that are self-employed and they're reporting a certain level of income. And then when they try to buy that property, guess what? They don't qualify for the loan. So they need to now make adjustments to their income perhaps, or use one of Lewis's services. And by doing so, they might lose any subsidy that they had been obtaining on an Obamacare plan, because now they have to report more income. There's other options and I can help them find those options. So I'm putting my information here in the chat. If anybody needs any type of assistance, guidance, questions, just feel free to use me as a resource. I'd be more than happy to help you and guide you in any way I can and point you in the right direction. And
Hey,
thanks again, Dave.
and I have a question, Eliu, real quick. I understand, but based on the conversation you and I had, there's supposed to be like open enrollment now during this time, right?
What was that? I'm sorry.
No, I'm sorry, not Louis. Eliu, I'm sorry, Louis.
Okay.
Yes, that is correct. Open enrollment is currently going on and it lasts until January 15th. And what that means is that if the best option for an individual or for a family is an Obamacare plan or an ACA plan, this is the time of year when they have to enroll. After that, they will not be able to enroll unless they have a qualifying life event. So not only is it the time to enroll, if you're currently enrolled in an ACA plan, but maybe you're not happy with it, you have limited accessibility to doctors or hospitals or medical providers, you want to explore other options that are out there, this is the time of the year to do it. Like I said, the deadline is January 15th. So again, I put my contact information there in the chat. If anybody has any questions, like I said, feel free, use me as a resource. I'd be happy to help in any way that I can.
Awesome. Thank you, Eliu. Thank you so much for joining us today. Louis, again, thank you, my friend, for joining us today for Real Estate Friday. You brought so much great content. So again, guys, call Louis for any mortgage needs. For NonQM products, I mean, he asked for it. So all your hard files, give him a call, put him to the test. If you're interested in some health insurance, Eliu put his information there as well. And if you have any questions about either one, or you need a little bit more explanation, or if you need help finding a partner so you can work with either one, or any help in putting your power team together, feel free to give me a call. I'll be more than happy to walk you through it as well. So thank you so much for joining us today for Real Estate Friday. Have a wonderful day. Enjoy your weekend, and I'll see you on Mindset Monday. Steve, you want to tell us where to go?
Yes, go to www.brokernation.events. As always, it's .events instead of .com at the end there. That's where I always post the latest and greatest events. And go there. And if you have any questions, or you want any recordings for this or any other of our events that we do on Mondays or Fridays or anything else, reach out to me, Steve@brokernation.events, or just reply to any of those emails and I'll get those.
Perfect. You can also find some of these videos or some of this blog or video blogs. If you go to our website, which is joinbrokernation.net, if you go to blog, you're going to be able to find not only information like this, but a lot more. So feel free to go www.joinbrokernation.net. All right, friends, with that said, have a wonderful Friday. Enjoy your weekend. I'll see you on Monday. Louis, thank you so much again. Eliu, thank you
Thank
also
you
for
all.
the information. Take care, everybody.
Thank
Take
you,
care, guys.
everyone.
Thank you.
I ask you all to unmute and put it on gallery mode so you
Bye,
can all
thank
wave
you.
and say goodbye and wish everyone a great weekend. Thanks,
Bye.
everybody.
Bye, everybody.
Bye. Bye.
Bye, Monica. Thanks for joining us. I saw you come in there.
See
Have,
you.
have a great
Thank you.
weekend. Bye,
You do
Lena.
too.
Bye. Enjoy your weekend.
Bye-bye.